Okay, hello everyone. This is Tyler from DPM Trading, and today I just want to show you guys one of what I think is my simplest setups. It's a momentum continuation setup, or at least that's what I call it. And it's pretty easy to spot and pretty easy to execute. So I just wanted to show you what it looks like here first. I'm just going to kind of draw it out, and then we're going to go to some charts and show you on a replay. You can actually see it play out in real life. Now, I am a intraday scalper primarily. I trade S&P 500 futures. I trade micros in a cash account and copy that over to some Apex funding accounts. And I'm going to show you how this works. It's a setup that you won't see every single day. I would say you probably would see it at least 50% of days and definitely multiple times a week. So here's what it looks like. So what we're looking for is, let me get my brush tool here. Give me one second. Okay, so what we're looking for is we want to see an area where the market's just like a little choppy. Now, sometimes it's choppy in sort of a trend, but not like a very strong trend, or sometimes it's just sideways. And then at some point, what we want to see is a strong breakout. And generally what we're looking for here is at least one, if not two or three very full-bodied candles. And we want these candles to be I would say larger than the average candle. We want a full body, so not huge wicks on them. And we want the last of these to really close near the top there. And then what we're looking for is a very tight consolidation near the top of this last candle. So we might get 1 bar or 2 bars. It might come down a little bit. And you might get a wick that pops over this candle a little bit. Now, one thing I want to say here is just like any other good and profitable strategy, there is going to be a certain amount of discretion and judgment involved in learning to choose when to take these setups or when not to take these setups. I'll give you a couple pointers towards the end of this video as to like situations where I might avoid taking the setup. But like, for instance, when we talk about wanting, this to be a tight consolidation, well, how do we define tight, right? Like, how much of a pullback is too much of a pullback for us to be comfortable? I generally want the consolidation to stay within this last candle. But again, like how tight is something you have to learn to kind of watch for. But I like it to be pretty tight. It's really nice if these two or three candles, or even just one, is inside of this last large full-bodied candle. And let me make this a little bigger so it's nicer to see. But like I said, sometimes you'll get a wick that pops up, and that's okay too. And sometimes it's not a perfect, straight line across this, and that's okay too. And then basically once we have this, all we're really looking to do is once we see at least one candle that's a tight consolidation, you want at least one candle to close. Now, there's an argument to be made that you don't have to if you go down to a lower time frame, but I like to wait for that, and I'll explain why in a bit. And then you put a buy stop order over the top of that consolidation, the stop just a tick or two under the low. And now me personally, I like to just hit for a 1-to-1 on these, and then you can choose if you want to leave a runner or not, okay? And then usually what you'll see is, and this is super important here, guys, so pay attention. So you're going to get a break. Now, sometimes this thing's just going to break and go right to your target. But what you don't want to do here, don't get too aggressive about moving your stop to break even. Technically, if you go to a smaller time frame, what you'll see is that this is a breakout play. So on a smaller time frame, it's going to look like, an impulse, and then something like this, a little consolidation, and then a breakout. And what do we know about breakouts? They like to retest the breakout area, right? And then continue up. So if you get too hasty about moving your stop, like our buy would have been over the top of this here. And if you get too hasty about moving your stop, you're just asking to get taken out, break even. So just let this thing play out a little bit. Sometimes you'll get these and the next candle might come down a little bit. And if my stop was really tight on this, I might actually add to get a little bit of a better average entry price here. And then eventually what we're looking for is for this thing to just take off. Okay. Now I like to go for a 1-to-1. Here's the caveat on this. If you get if this is a nice consolidation and this is the first sort of impulse out and the first micro consolidation, I call it, after that impulse, a lot of times this first one you can take for a 1 to 2, or if you have a price action based target, you can go for that price action based target. And very often what you'll see here is this will continue up, and we'll very often get another second very similar setup, okay? Now, this second one is definitely fair play, right? So we would do the same thing again. Oh, again with this. Okay. Stop under there. I like to go for the 1 to 1. Now, if I take this one, again, this first one, I like to go for the 1 to 1, but a lot of times these will go for 1 to 2 easily. But the second one, I recommend only going for a 1 to 1. And then here's the deal, guys. Very frequently, when you have a strong impulse like this, you will get a third setup. Usually not, like notice the second one's a pretty good clearance from the first one. The third one, a lot of times, will not be as big clearance from the second one, okay? This one will sometimes work. I personally don't take the third setup, okay? Because sometimes it's not good enough for me. But if you catch the first one especially, and you learn how to like really identify this, these have a really decent win rate. With 1 to 1s, I would say you're probably over 75% win rate. And it's just such an easy setup. You're going with the momentum, you're buying the breakout or selling the breakout. Obviously, the short version of this would look just the opposite. But really simple. So let's go to the charts first, and then what we're going to do is we're going to talk about like situations where I may not take this setup, okay? And there's really only a couple of things that you want to think about with this. All right, NinjaTrader, there it is. Okay, scrolling to my NinjaTrader. This is in replay mode. Now today is Monday the 23rd. I have this set up for Friday. So this setup definitely took place on Friday, and I'll show you today. I can't do replay of today yet because the day's not done. But after this, I'll show you. I took one of these setups today. It was actually the only trade I took today. And it worked out really well. So what we have here, so we're in replay. This was right now about just before 1 o'clock p.m. Eastern time. So I just want to point out, first of all, that if we look at this chart, let me make this a little bigger for you guys. There's actually one of these setups already right in here. Now this one, I might not have taken. This one was, I would call this like a B plus setup for me. And the reason why, and here, let me circle it for you so you can see. The reason why I would call this a B plus setup for me is that notice how this strong bar didn't close as high towards the top as I would normally like. Again, I'm going to zoom in here a little bit more. So I like it to usually close higher towards the top. But you did get this nice, pretty tight consolidation if you look at this whole impulse up. And we can go, this is a 5,000 tick chart. This is the main chart that I use on micro ES futures. I take my setups off this chart. I sometimes will zoom in to the 1,000 tick chart just to confirm the entry, but I do not take the setups off the 1,000 tick chart personally. And I do look at higher time frames as well. So here's that setup. So what we had was this push up. This, you can see it's this little, we got this kind of pullback here, pushed up, you got this little wick, pulled back again, and then it sort of took off here. So that's what you're seeing right here, okay? And the reason that I don't love this one as much is because when you look at it on the smaller time frame, like, the reason that this is one of the reasons that I wait for a full candle close on the larger time frame, because on the smaller time frame, if you were to just look at this and say, oh, okay, when it breaks the top here, I'm gonna buy, you actually would have gotten stopped out by a tick, okay? But I'll talk a little bit more in detail in a minute about why I like to wait for that at least one full candle to close. But this is what it looked like on the smaller time frame. And so it just wasn't an ideal setup, even though if you took it based off here and you waited for the second candle to close and basically you would buy here and your stop would be down there. And you can see it's an easy 1-to-1 and actually, again, a 1-to-2. And this, again, technically is the setup as well. Whoops. But again, on a smaller time frame, it's a tight consolidation, but you can see we don't have the bars closing near the top and then the consolidation sort of inside of that large bodied bar. So I would not have taken this, but you do get the 1-to-1 just barely on that. Okay, but let's go to the setup that I actually wanted to show you. So I just wanted to point out a couple of those that I would have skipped because they're just not clean enough for me, even though they would have worked. So we're going to zoom forward a little bit. I've got this in fast forward. I don't want to go too fast, but I do want to get to where we need to be. And we're waiting for, I think it's going to be about 1:15. So you can see we're chopping sideways. So that's kind of the first criteria. I don't want to take one of these after we've already been in a strong impulse. Okay, so we're in a trend. We want to go with the trend for sure. Let's fast forward. So here we go. We start to get this nice impulse up. Now, I'm going to pause here. So see what we have here. We have 1, 2, 3 now very full-bodied candles. And these first two especially close right at their highs, okay? Let me slow this down a little bit now. And you're going to see how this plays out. Now we start to get a little bit of a pause, okay? A little bit of a breather. But bear in mind, we consolidated, and then we broke out with a very strong impulse, multiple strong-bodied candles in a row. And now what we're doing is we're just waiting for this candle to close. And remember what I said, it's okay if it wicks a little bit above this candle. That's perfectly okay. All right, now you can ignore this line because this is, I've been trading on this chart since this day took place, but again, it's a little bit of subjectivity when you decide how tight of a consolidation is tight versus, no longer a tight consolidation. So I would not have placed any orders yet. You can see we're still just chopping around in here. And what I want to show you as well, if we go to the 1K tick, okay, so we have this very strong impulse, and then you can see we're just kind of going sideways. So we're waiting on the chart where our setup appears for at least this candle to close. Again, I will explain why I wait for that momentarily. But once it does, we are going to place a buy stop right above here, right about there. And we're probably going to get triggered in almost immediately. See where our 1-to-1 is. There it is. So once we trigger in, we'll move our stop and our target. Speed this up just a touch. We'll see how this plays out. This is 4x speed. So even though this candle broke above a little bit, what keeps me liking this setup is that this sort of, we call this like the mother candle, I guess, even though this isn't an inside bar, closed very much at its highs. Now, if this came down lower, I'd have to move where I'd put my stop here. And it might. I don't remember exactly how this played out. Okay, so here we go. And then once we trigger, we move our stop, we move our target, and bam, it goes right there, right to the target. And that happens so frequently, okay? So that's a really clear example of how this setup plays out. Now, a couple things. Remember I mentioned I talk about, why I wait for this second candle to close, or this, I would call it the first consolidation candle to close. One of the things that we want here is we want to make sure that enough volume has built up in this consolidation, because while price is moving sideways, again, let me go to the 1,000 tick chart. Okay, so while price is moving sideways, what's happening here is some people are distributing positions, but some people are accumulating positions, meaning there are people who are accumulating sell orders, right, short positions, anticipating that this is, strong push up, that maybe it's going to retrace. You want enough of those positions to have accumulated, because once this breaks out, it's those people getting off sides and exiting their orders, which are going to be buy orders to exit their shorts. That's what's going to fuel this move. So part of me waiting for this first consolidation candle to close is I want at least that much volume to have sort of accumulated in the consolidation. Okay. And with a tick chart, which is what I use, that's exactly what you're getting. I know at least 5,000 orders have happened there within that consolidation. And sometimes you'll get 2 or 3 of those bars there, but I like at least one. It's just one of my criteria. You can play with this as much as you want to, but that's the way I like to do it. So it's about making sure the consolidation is long enough to have accumulated enough people, right, who are possibly entering counter trend that they will end up offsides on that breakout. Okay, that's why we are waiting for that, just to sort of make that clear. Okay, now what I want to talk about really quickly is situations where I would like maybe not take this. Now I already mentioned one. A lot of times you'll see these play out 2 or 3 in a row. Okay, the third one I'm not going to take. Fourth one for sure, definitely not taking. Another thing that you'll see is, let's just say that this was a resistance area. Okay, this line here, this gray line it's at 58.25 here. Let's just say that that was a resistance area that I was watching. Now, a lot of times you'll be a bit under, like, let's just say that this whole thing happened, like, down here. Okay, and you go, oh, I don't know if I want to go long right into this. I can't tell you how many times I've done that and then watch this work out beautifully for at least that 1-to-1, because often, again, you're getting the people off sides that when you break out, it fuels them. And we all know resistance lines don't always hold to a tick. So very often, if you've got at least enough room where your 1-to-1 gets you out, like at or near this, even if you're slightly above, they're still going to hit really reliably. This one, to me, if this line were here when I had been trading, and I cannot tell you if it were or were not, because this is a historical day and I just don't want to delete my lines that I drew today. It's a Monday and I drew fresh lines today. But this one I may still have taken. Where I will avoid it is if you get a breakout and you're breaking out of like a larger breakout area, right? So let me go back to my trading view chart. Let's just say that we had let's do this. Okay. Let's say we had, a larger time frame, like move up, and then, we started coming down. I don't know why this is drawing so weird like that. It's very obnoxious. We started moving down, and this was like a really like larger time frame area, and then whatever, we got consolidation, and then moving up and consolidation. And so we're watching this sort of higher time frame breakout area right there, okay? And let's just say that we get, we get that breakout, and then we get this setup right above that breakout area, like right above it, okay? So we get our little, impulses right here. A lot of times I will not take this, because when you have this higher time frame breakout area, we all know that breakouts fail very frequently, right? So it's very possible that you're going to get this like just poke through this higher time frame breakout area and then a big sell-off to flush it back down and trap, have trapped in some longs here. So I'll take it right below this level. But if it's right above this level, I'm kind of not interested. Now, if it got enough above, like you started to get, again, like a really nice impulse, and now we're way up here, okay? Like, for sure, I'm taking this. 100% of the time, I'm taking this setup. Is it going to work 100% of the time? Well, of course not. Nothing works 100% of the time, right? But 100% of the time, I'm taking this one. I'm just not taking it if it's if it's like part of what could be a false breakout. Okay. So back to my NinjaTrader real quick, which is my platform of choice. Give me 1 second. Okay. So back in here, the other thing that I'm always mindful of is just higher time frame. So my 5,000 tick chart is my my setup chart and often my execution chart. Although, like I said, I will sometimes go down to the 1,000 tick just to confirm those entries. Not generally on this setup, but on my pullback sort of supply and demand setup, I will sometimes go down lower. I often will look at a 25,000 tick chart as sort of my higher time frame. This would be, I guess, kind of equivalent to between like a 15-minute and a 1 hour, depending on time of day. So during the cash session, these bars can print every 15 minutes easily. During overnight, they can be like hour-long bars. And again, I can use my anchored regression tool, which you can find on our website. And I can see that, we're very clearly in this uptrend. And what I want to make sure of is if we're poking way out above this upper regression channel, I'm going to proceed with a bit of caution. I definitely want to be within the regression channel. And obviously, if we're breaking down like very clearly below it, I would also proceed with caution. But what I like about this setup is we came down, we sort of probed the bottom of the regression channel and then came back up into it. So we're coming off the lower end of the statistical regression, heading towards the upper end of the statistical regression. And that's kind of what I'm looking for here. And so that's exactly, this was us poking down below and then heading back up towards the upper end of that regression channel. And I like that. I like that a lot. So this was a pretty clean setup for me. Now, let me just really quickly show you today's setup. So setup I took, we opened the day right around here. And this was actually a decent demand setup. I was tempted to buy over the top of this bar right here. And I didn't love the setup. If you looked at this on like a 5,000 tick chart, it was not super clean looking. I'm sorry, a 5-minute chart, which I do reference, it was not super clean looking. It would have worked out, so I left a little bit of money on the table there. The setup that I took was this one right here. It wasn't perfect, but this dotted line here is a POC from a 4-hour chart. So this is the 4-hour. We opened down here, and I looked at this whole consolidation right here in my volume profile. Sorry, it's always super slow when it's first loading my charts here. And you can see this POC of that consolidation at 1250. So once we got kind of inside of this area, I was looking for price to at least kind of get sucked into that POC. So, and notice that this first purple line here, which is right about where the trade took place, this one here at 44.50, it's not a breakout level. It's just it's the lower support resistance line of this consolidation. This would be the breakout level, would be more up here. Okay. So on the 25,000 tick, you can see this is not liking me today. You can see, very strong uptrend. And I do apologize, guys, that my computer is being slow and choppy here. So you can see very strong uptrend on the 25,000 tick. Again, this is that little demand area at the open today. This was Friday's day, which is what we were just looking at. And again, you can see this white line here is the line that we were talking about. That was not a breakout level, which is why I didn't mind taking the trade near that line. It was just this little support area. It's a daily support area. It goes back way further than this little move, but that's for another video. And so this was the open of today, strong uptrend on the 25,000 tick. And then what we had was this consolidation, this just very, in my opinion, this whole area from the end of the day, Friday into today, was just very choppy and kind of gross. And then we started to get this strong push out. And if you're watching this live on the tick chart, these candles printed so much faster than all these preceding candles. This was like watching paint dry. So even though this trade worked, I was glad I wasn't in it because it just would have been painful to sit through. Got this strong move up. I put my buy over the top of this candle, stop below here. I took 2 contracts because it was a very tight stop. And you can see once it broke out, it just went immediately into profit. Now, this one here was on the smaller time frame. You'll see it was a tight consolidation. You probably could have taken it and it would have worked, but I don't take the setup on the smaller time frame. So I'll show you where that was really quick. So this is the one I took right above that purple line there. Just strong move up, tight consolidation. You got this sort of equal highs here, so you know there are stops there. And then we ran it hard. And then this was that other one. So again, strong move up, tight consolidation. Again, you got the little double top move and then the breakout and off it went. So those are the ones I took today. It's a really easy setup, guys, once you learn to identify it and spot it. I did not like this one. Why? Because this wick just went like, I would have liked this maybe if there was like another strong bar above this previous high. This wick kind of went above this high and then pulled back into it. It almost looked like it was going to be a false breakout. And because this was a POC area from the larger time frame, I was anticipating the possibility of some choppiness in there. There were just a few things about it that I did not love. So I opted to not take that setup. But it worked out. It would have worked out. But this is the one I did take. It was an easy setup. 2 contracts, again, $35 on a micro, 2 contracts. But I copied that into a bunch of accounts, so that worked out really well. So I hope you found this video valuable. If you did, please subscribe. Please like the video. Please hit subscribe. Check out our website, dpmtrades.com. The anchored regression tool at the time of making this video is not yet publicly available, but it should be within the week. So depending on when you're watching it, it may be available if you're interested in purchasing that. And you can also get access to our Discord room, which again, at the time of making this video is currently free. I cannot guarantee that it will always be free, but right now it is currently a free Discord room. And you can access that at our website, dpmtrades.com. So thank you guys for watching, and I will catch up with you soon.